At Numerian Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you.
Today, October 3rd, 2022. 7 cheap Cathie Wood stocks to buy in October. Here are 7 cheap Cathie Wood stocks to ride the portfolio manager's comeback. The portfolio manager herself continues to like these 7 cheap Cathie Wood stocks. Tesla, Elon will continue to deliver. Exact Sciences, the pathway to profitability is getting closer. Zoom Video Communications, Zoom's got more to offer than most investors realize. Trimble, it's transforming industries with its technology. Shopify, Shopify will come back more humble and ready to deliver real growth. Iridium Communications, its low Earth orbit satellite network is transforming communication. Xometry, the company's made-on-demand custom manufacturing marketplace is in the early stages of tremendous growth. If you're looking for cheap Cathie Wood stocks to buy in October, you might want to stay away from the controversial portfolio manager's latest fund. On September 27, Wood's investment firm, ARK Invest, announced that it had launched the ARK Venture Fund, a closed-end fund that invests in both public and private companies. For a minimum investment of $500, investors get a portfolio of 25 to 50 holdings. The only downside, the fund is illiquid and you pay total fees of 4.22%. Let me save you the trouble. Don't even think about buying shares. The fees are too high for retail investors. If you want to use some of your fund money to bet on cheap Cathie Wood stocks, you're wiser to buy one of her ETFs that charge approximately 0.75%. If you're more aggressive, consider these 7. Tesla, $265.25. Exact Sciences, $32.49. Zoom Video Communications, $73.59. Trimble, $54.27. Shopify, $26.94. Iridium Communications, $44.37. Xometry, $56.79. Tesla. Up front, I want to say that my selection process wasn't scientific. I've chosen the top-weighted holding from 7 different ARK Invest ETFs. Tesla, NASDAQ, TSLA, is the top holding, 10.44%, of Wood's ARK Innovation ETF, NYSE ARKK, her firm's largest fund by total assets. If you don't know the story about Wood's bold predictions about Tesla's share price, I suspect you've been living in a cave somewhere. Google Cathie Wood Tesla $4,000. There are plenty of articles to get you up to speed. In the meantime, Wood said in April that she sees the stock hitting $4,600 in 2026. Tesla's shares split 3-for-1 on August 24. So dial that projection back to $1,533, $4,600 divided by 3. Based on its current price of $267.93, it has to appreciate by 472% over the next 51 months. It's more than doable. However, it won't get there without a few bumps in the road. Barron's recently reported that Piper Sandler analyst Alexander Potter believes that the analyst delivery estimates for third quarter of 2022 are too high. He believes that the company will deliver 354,000 electric vehicles in the third quarter, 26,000 less than his previous estimate, and 4,000 less than the consensus estimate. Potter's skeptical about the delivery numbers from all 4 of its existing factories. As a result, he cut his target price to $340 from $360. Despite the cut, he still rates it a buy. Tesla is one of the best cheap Cathie Wood stocks to buy because it's trading at 14.7 times sales, cheaper than it's been since 2019. Exact Sciences. Exact Sciences, NASDAQ Exus, is the top holding of the ARK Genomic Revolution ETF, BATS, ARKG, with a 6.77% weighting. The company's cancer detection diagnostics tests, Curaguard, Oncotype DX, and OncoMap X-Ray are at the center of its plans to eradicate cancer. In the second quarter, excluding COVID-19 testing, its revenues increased by 26% over last year, to $508 million. A good chunk of the revenue, $344 million, was from its Kurgard cancer detection test, with the rest, $154 million, from its precision oncology business. For all of 2022, it expects revenues of at least $1.98 billion. Unfortunately, it doesn't make money. In the second quarter, its operating loss was $159.6 million, down from $171.7 million a year earlier. Analysts love this stock. Of the 20 that cover it, 18 rated a buy or overweight, with an average target price of $70.06. That's more than double where it's currently trading. Down more than 60% year to date, it trades at 3.09 times sales, about 1/4 of its 5-year average. If you don't mind investing in companies that lose money, you couldn't get behind a better cause. Zoom Video Communications. Zoom Video Communications, Nasdaq ZM, is the second largest holding of the ARK Next Generation Internet ETF, NYSE ARKW, with a weighting of 7.29%. In the past month, I've been on video calls using Skype, Ring Central, and Google Meet. Sorry, no Zoom. And that's what I keep wondering. Is there really a big difference between Zoom's product and the many competitors? Apparently, the company was wondering the same thing, so it created a new logo that lets people know it is about so much more. What started as a video meeting app quickly moved into broadcast webinars, connected conference rooms, and more, and it continues to evolve and expand, Zoom Chief Marketing Officer Janine Pelosi said in a September 12 blog post. This evolution is more than a decade in the making. You will see it reflected today in our new look and refreshed visual identity. You'll also see it in the innovation in our product offerings. I guess this innovation is what Cathie Wood sees in the company behind the video meeting app. Hey, and it's relatively cheap at 5.41 times sales, well off its 2020 high of 51.08 times. Trimble, Nasdaq TRMB, is the second largest holding of the ARK Autonomous Tech and Robotics ETF, BATS, ARKQ, with an 8.30% weighting. Held by at least one other ARK Invest ETF, Wood's clearly excited about the industrial technology company that got its start in GPS, Global Positioning System, but has morphed to be so much more. For example, it recently acquired Bid to Win, a company that provides specialized software for heavy civil construction management. Bid to Win will slide in under Trimble's Buildings and Infrastructure segment. In the second quarter, this segment generated $101.4 million in operating profits from $382.6 million revenue. It's the company's largest revenue generator. I looked back at some of the articles where I recommended Trimble stock. One of them was in August 2021. Funnily enough, it was for 10 stocks to buy from Cathie Wood's fleet of ETFs. I like Trimble because it generates decent free cash flow while also growing it at the same time. In 2021, its FCF was $704.4 million, up from $615.2 million in 2020, and $516.0 million in 2019 with a compound annual growth rate of nearly 17%. The way I look at it, any business that can move the construction industry out of the Stone Age is going to be a winner over the long haul. Trimble's PEG ratio hasn't been this cheap since 2019. Shopify. I didn't want to select Shopify, NYSE, Shop, over Block, NYSE, Square. However, the Canadian e-commerce platform is the #1 holding of Wood's ARK FinTech Innovation ETF, NYSE ARKF, with a weighting of 9.31%, 27 basis points higher than the parent company of Square and Cash App. I guess that's the way the cookie crumbles. It has not been a good year for CEO and co-founder Toby Lütke. Its stock has lost more than 80% of its value and 85% from its November 2021 52-week high of $176.29. In late July, Lütke was forced to cut 10% of its workforce due to the slowdown in e-commerce post-pandemic. Lütke bet that e-commerce would continue to grow at a much faster pace than physical retail. Unfortunately, for his wealth and those of his longtime shareholders, he was wrong. People have returned to in-store shopping in a big way. Further, his executive management team has completely turned over in the past year, giving the impression that he's impossible to work with and for. And, of course, who can forget his grab for power in April that saw proposed governance changes that would cement his role with the company for years to come? The changes took effect on June 10. While all of this is unsettling, it could be the best thing that could have happened to the company and Lutka. Now, it's been forced to better divide its resources between offline and online commerce. At the height of Shopify's success in 2020, it had a price-to-sales ratio of 56.0. Today, it's 1/8 that multiple. The risk/reward proposition is tilted back in the investor's favor. Game on. Iridium Communications. Iridium Communications, Nasdaq IRDM, got a bit of an assist from Apple, Nasdaq Apple, at the tech company's iPhone 14 launch in early September. Apple announced that it was partnering with Globalstar, Nizzy Americansat, to provide its customers with text-based emergency services when they're in areas with zero or little cell service. BWS financial analyst Hamed Khorsand believes that this helps pave the way for Iridium's low Earth orbit satellite network to obtain the same type of gig from other handset makers. The company recently signed an agreement with an unnamed smartphone partner that will see its technology embedded in the smartphone company's equipment. Iridium is the second largest holding of the ARK Space Exploration and Innovation ETF, BATS, ARKX, with a 7.86% weighting. The company's revenue in second quarter of 2022 increased by 16.7% to $174.9 million. Meanwhile, its operational EBITDA, earnings before interest, taxes, depreciation and amortization, rose by 11.8% to $105.5 million. Compared to Globalstar's EBITDA margins, Iridium's a big money maker. Xometry. Of all the names on this list, Xometry, Nasdaq XMTR, is the only name I am completely unfamiliar with. It turns out to be the largest holding of the printing ETF, BATS PRNT, with a 5.62% weighting. Xometry is the largest online marketplace for custom manufacturing. You upload a 3D model of the part or parts you need manufactured and Xometry's AI-enabled marketplace scours its 5,000 suppliers to come up with a price and next steps. I'm oversimplifying the process, but that's the gist of it. Xometry went public in July 2021, selling its shares at $44, and generating $325 million in net proceeds in the process. It used some of those funds to buy Thomas, a leader in product sourcing, for $300 million in December 2021. I remember Thomas for its big red product sourcing books that you could scour through at public libraries. Of course, everything's online now. Does it make money? Not yet. In first quarter of 2022, it lost $12.6 million on a non-GAAP basis on $83.7 million in revenue. However, revenues jumped 90% year-over-year based on the Thomas acquisition and an increase in the number of marketplace active buyers and the amount those buyers spent on the marketplace. Thanks to Cathie Wood, I've found a new company to admire from afar.
Thanks for watching Numerian Capital News. Please come back tomorrow for another stock news update. Thank you.